Hi, my name is Robin Slakhorst. I'm one of the founders of Symbid. Symbid is an online funding platform or crowdfunding platform, and we specialize in doing equity transactions. We studied entrepreneurship, and everybody around us wanted to become an entrepreneur, but everybody started working for the big corporates. And we figured that having sufficient capital to start your business was the main issue for the people around us. So we wanted to solve that problem basically. And we built something where it would be easier to get your first starting capital as a company, which now has grown out to a broader offering. We're a transaction platform, so we basically charge for all the little transactions being made on the platform. Could either be for data or for doing a financial transaction, but in the end, everything is transaction based. We serve two sides, so we help entrepreneurs on the one hand, and on the other hand we have to help investors find the right deal. We work with entrepreneurs from startup to SME companies with a capital need for approximately 2.5 million. And on the other side we work with private investors and also regional development funds and angel investors. Yeah, so we were special to begin with because we were the first equity crowdfunder in the world. So we help companies sell pieces of equity to a large group of investors for non-listed companies. That's what we started with, and we were basically one of the few then, but still there are only a few players in Europe or even worldwide that do equity-based crowdfunding. We're now transforming into a broader offering, which will also be able to serve debt and convertible note kind of offerings. So from an equity platform to basically offer all hybrid financing options for SMEs. We work with a cooperative model to basically bundle all the smaller investors and make it into one per deal. So if you as an entrepreneur, you raise, let's say 100,000 euros on our platform, instead of having 100 or 1,000 direct equity investors in your company, you only have one. And we use a cooperative, in our case, to basically bundle all the smaller investors into one bigger investor. Why do we use a cooperative? It can be administered fully online. So as an investor, it's as easy as buying a pair of shoes in a web shop. Now you can become a shareholder in a company without having to sign a contract, without having to put your passport or scan your passport and send it somewhere. It's really all done online, and that's the biggest advantage of using the cooperative model for us. So we have insourced a tech team, so we have our in-house tech at this moment. So we have developers trying to increase or further develop the platform as much as possible, because even though you're not a tech company, you are working in the fintech space. So financial technological innovations are basically the fundament of what drives crowdfunding or online funding platforms. So you have to be constantly innovating, and we think by having an in-house development team, we can do this best. You're a marketplace. Online transaction platforms are usually marketplace driven companies, so you need to have high volumes. So for every crowdfunding platform or for every marketplace kind of platform on the internet, but also offline, you need to have a critical mass in order for it to function best. So you need a lot of buyers, you need a lot of sellers to come to the best price, to have fast transactions being taken place, and that's the biggest challenge for, I think, every player, is to create a critical mass. Well, crowdfunding is a change in how money is being distributed. It used to be done via the distribution networks of banks, for instance, or other offline investment kind of companies. And this complex transaction of investing in a company is now being created can be done now in an online setting. So it was an offline setting, but it's now transforming into an online process. And that's basically what we have seen in many industries before. Traveling agencies aren't hardly there anymore. Insurances are being sold via the internet, and now investing in a company, either debt, equity, convertible, doesn't really matter, is done in an online setting. So it's a transformation of a complex industry towards an online distribution model. The investors on Symbid, the first ones already received dividends as part of profits that have been made within the companies. But the best way to create a return is by capital increase or by the best way the first stakeholders on the platform already received their dividends, but the best way to receive a return on your investment is through an increase of the value of the shares you have bought. So what we see now that there have been multiple up rounds within several companies that have raised money on Symbid, with a value increase of 1 to sometimes 10 times the value for which they raised the capital on the platform. So on paper, the shares of the investors have threefolded or fourfolded or sometimes tenfolded in value over the course of their shareholding. I think crowdfunding or online funding platforms, they will basically take over a large part of especially in the beginning, the smaller company financings. Again, debt or equity, convertibles. I think every transaction between an investor and a company will be done in an online setting in time, and you see the first signs happening right now. So we're really at the beginning of a new way of distributing investments towards SMEs, and this will increase over the years. I think banks can learn from online transaction platforms in their efficiency and their low costs. Banks have had a lot of overhead. It's really difficult for them to have a cost-efficient process in place to do the transactions below, let's say, 500,000 euros. It's a costly process for them. The online efficiency and the online distribution makes it so efficient and so transparent that it will be really difficult for banks not to also create their own or partner up with other online platforms to profit from this transaction efficiency. On the other side, banks have a large experience in how to finance SMEs and how to do it in a sort of profitable way, especially the smaller SMEs. So what can online platforms learn? Use the ways banks have been using over the years to analyze and to track and monitor companies to keep your defaults as low as possible. We want to be the top 3, of course we want to be the biggest, but we want to be top 3 online funding platforms for SMEs worldwide.